G'day guys, welcome back to Pete's Investing. It's March 26, 2024. This is the gold, silver, Bitcoin and US dollar technical analysis. First we'll look at the trend table. You can see they've got a number of instruments there, but today we're looking at those in the middle there. And gold and silver, medium to long term, are both bullish, although they have turned down into a bearish momentum at the moment. Likewise, Bitcoin, it's turned neutral. And the US dollar is slowly turning bullish, and the longer term is still bearish, so just be careful about going long too strongly on that one. So looking at gold first off, we've got the daily chart here and the hourly chart. What we look at here is a few indicators. The CCI 1500 is broken up and still in a bullish momentum, although just be careful, we've got this bearish divergence on the CCI 150 versus higher highs on the price after hitting that resistance at 22.23. Now, on the hourly chart, if we zoom out, I've got this stochastic market forecast indicator, which shows if it's been overbought, and it is actually retracing from the overbought territory at the moment. So we may see a bit of a pullback in the short term. There's no telling where it may stop, but at the moment it's still retracing to the downside. Now, if I zoom in, I've got here the CCI 150 as well. Again, this is our divergence indicator primarily. There was a bearish divergence back here versus higher highs on the price. It pulled back, hit our target area. That was a 23-38% level of the Fibonacci range, down to that level. So for those new to Fibonacci or to the channel, if I draw that between that high and that low, that's where that Fibonacci would have been. Actually, it was probably that point there. That's where the 23-38% target area was. And you can see there it just hit the target area, touched it, and then bounced up from there after hitting this resistance, and it's actually making a bit of a retrace again. Now there's no divergence at the moment, bullish or bearish, on the lower time frame. So that's where we are at the moment with gold. With silver, similar sort of pattern actually. If we wait for it to build. So similar pattern, it's got a bullish momentum on the CCI 1500, although there is a bit of a pullback. It's actually broken down and penetrated into a short positioning below the moving average band of the CCI 150. There's not really a divergence to talk of at this point. You could probably argue that's a double top on both the price and the CCI 150, although I'm not going to call it as a divergence. And again, going back, you see there was a bearish divergence. I haven't drawn the trend lines, but back there, just as an example, again for those new to divergence and this channel, there was a bullish movement on the price, higher highs there versus lower highs on the CCI, and that's a bearish divergence. It fell back, hit our target area. Again, there's nothing happening at the moment as far as actually no, you could call that a bearish divergence at the double top on the CCI there versus higher highs on the price. And we're going to call that as a target area minimum. You can see there it's already hit the 23-38% level. I don't trade those necessarily. I use these divergence as an exit point, especially if you're seeing, if you're going long in this case, for example, you can get out in a couple of ways. You can get out using when the CCI breaks within this moving average band, it's probably the best way. Or at the very least, get out before you see this. When you start seeing this divergence, a bearish divergence, you get out and take your profits. On the hourly chart, again, we're in the overbought territory. It's pulled back, and we need to see it break below this 50% level to be very bearish on it. And if I zoom out on this, you can see there, if I pull at that point there, when it breaks above the 50 point level on the stochastic market forecast, that's where it's also bullish on the daily as well. Alternatively, if it breaks below the 50 point there, that's where you want to see it break below on the daily. Next, we look at the US dollar. And for the US dollar, again on the daily, you can see it's broken above. It was trending sideways and pretty much neutral on the CCI 1500. It broke up through the CCI 150. There is no divergence, bullish or bearish, on that point. If I zoom out, going back, there was a bullish divergence here. Again, just as an exercise, higher lows on the CCI 150 versus lower lows on the price chart. But at the moment, there's no divergence to talk of. On the hourly chart, we're heading into the overbought territory. So you can see they're slightly weakening. There's no guarantee it's going to turn back, but you can see there when it's in the overbought territory, it does actually pull back eventually, and then we wait to see it break below the 50 level to be more bearish, and that's where it was at that point there. If I zoom in, there was a bearish divergence back here on this lower highs on the CCI versus higher highs on the price, broke down, hit our target, actually fell much lower than that. And then more recently we had a bullish divergence here versus the price, and it bounced up from there. And more closely, bearish divergence there, pulled back pretty strongly there in those few hours, and another little bearish divergence there as well versus the price, and it pulled back. You can see that it's just touched our target area. Now this may break higher, but at the moment the CCI is still dropping off, and we may see it fall further than that. If it drops below the 61%, if I was to draw a Fibonacci, if it was to drop below the 61% level, then we may see further declines and more bearish outlooks. So at the moment, it's still bearish, still moving in a downward trend, and we may see, if that continues, we may see it then break into the moving average band on the daily as well. And lastly, let's look at Bitcoin. Bitcoin's very strongly bullish on the CCI 1500. It actually came back, touched this 30-period moving average, which is a potential exit point if you're trading this period. But I like to get out when it hits this moving average band. It gives you a lot higher exit potential of your trade. You can see there it's broken below the moving average band, but don't go short until this breaks to the downside as well. But still, we're still in an upswing above the VWAP trend line. If I zoom out first off on the 1 hour chart, you can see there we're overbought, broke down, hit this support at 6,800 after hitting that resistance at 73,660. It's making a retrace back to the upside. So it's moving back towards the overbought territory. Zooming in, you can see there we had a bearish divergence, lower highs on the CCI versus higher highs on the price, and eventually did come down and hit our target area. At that point, then bounced right off it as well. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along and longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.